Good afternoon. I'm here today to tell you a little bit about a new product that we're offering. It's a loan that we typically call a deferred interest loan. And a deferred interest loan or a deferred payment loan, sometimes called a straight note, is a loan in which the borrower doesn't have to make monthly payments. Instead, those monthly payments are added to the principal balance, and then that payment is then compounded along with the principal loan on a monthly basis. So, for example, if we do a loan for $100,000 secured by a first trust deed on a property, and assuming the loan has an interest rate of 12% for simplicity purposes, that's 1% per month. You would be collecting a payment of $1,000 a month. So rather than sending you a check every month for $1,000 that you would likely deposit in your bank, and in today's world, that could pay you anywhere from 0 to 3% on that $1,000 check. Instead, with a deferred interest loan, that $1,000 won't be made by the borrower, but instead will be added to the balance of the loan. So at the end of the first month's term, they now owe you $101,000, and that $101,000 will be compounded. So that will be earning interest at 12% until the next month's payment is due. And that $1,000 will then be added to the balance, and that will continue up until the loan matures. So with a typical one-year loan on a deferred interest loan, you would be getting 12 monthly payments of $1,000 that you would likely deposit in your bank. That would earn you anywhere from 0 to 3% if you're lucky. And that's how much money you would get on that $12,000 you had accrued over that 12-month period of time. With a deferred interest loan, not only will they owe you $112,000, but that compounded interest will be added to that $112,000. So the amount owed will be significantly more than it would be if you just collected those monthly payments. The other benefit of deferred interest loans are the fact that they are a true passive type of investment. Once you make that decision, you won't need to worry about your loan servicing or check on your payments until the loan matures. So like most investors might just mark their calendar a couple of weeks before maturity if they haven't heard from us yet about the loan paying off, to see whether or not that loan will be paying off, and they can buy another deferred interest loan. Additionally, on our underwriting, we're going to be writing these loans at a lower loan to value, understanding that the amount owed by the borrower is going to grow each month. We're going to keep our loan to values a little bit lower than we would otherwise. And we're going to be a little bit more selective on the properties because we want to make sure that the properties that the loans are secured by are in areas that are likely to appreciate, thereby offsetting the increase in your loan balance and not seeing an increase in your loan to value. So in summary, we're going to include a flyer with this video for you to answer any questions that maybe I have overlooked. And if you can think of anything that still comes to mind, please feel free to email us. And we're looking forward to rolling out our deferred interest trust deeds.